Hey everybody, Melissa Harmel here, Realtor with eXp Realty Alaska. It's episode 5 of the Home in Alaska show, and I'm so excited to come to you today and talk with one of my favorite Alaska home loan professionals. Today's topic is tips and tricks to improve your credit score. To help us all understand how we can improve our credit scores in order to take advantage of lower and better interest rates, Rhonda Johnson with Cornerstone Home Lending is here today to share with us exactly how to do this, her tips and tricks. So, hey, Rhonda, how are you today?
Hey, Melissa, doing great.
So, Rhonda, you want to tell everybody how long you've been in the mortgage industry?
Yeah, so I started in 1983 and have been continuously in this industry, little different pieces here and there between processing and underwriting and closing and being a loan officer. And I just have to tell you that this is the thing for me being a loan officer because I get to meet so many cool people and talk to them about lots of planning and ideas and putting the puzzle pieces together to complete that picture. And that's just one of my favorite things to do every day when I get up. But you've been
And
doing
we've
this a
been
long.
working together for about 15 years. I've known you for about 15 years now, which is crazy.
I know, to think about that because you've been doing this a long time too.
Got my license in 1998. Yep.
Yeah, yeah,
So
yeah.
I've been doing this a minute, not maybe as long as you, but still a minute.
Yeah, exactly.
So to get to our topic today, I'm hoping that you can open that bag of tricks that you have and share with the viewers how we can all improve our credit scores.
Yeah, I would love to. So, just a really super quick overview. There's 5 things that affect your credit score. So, the first one's going to be how well you pay your bills, right? So, that's a no-brainer. Pay your bills on time. The next one is going to be what your credit balances are to your credit limits on your revolving credit cards, not your installment loans, but the revolving accounts. And then the length of time that you've had your credit and the mix of credit, and then people checking your credit. So those are kind of the 5 factors. And sometimes I'll have clients come in and their score is a little bit lower, and they're like, I don't understand. I pay that credit card off every single month. So I don't understand why it's dinging me for having too high of balances. But the answer to that, or the secret to that really, is when you pay that credit card off. So, for example, my husband is self employed and he owns a mechanic shop. So he'll put $20,000 worth of charges on his credit card, buying engines and motors and tires and tools and parts and all this stuff. And he gets his invoice, he checks it off with all of his work orders, and then he writes a check and he pays it off and uses it the next month to do the same thing. But he doesn't pay it off until he gets that statement in the mail. Well, when you look at your credit card statement, it says your closing date is one thing and your minimum payment is due by a due date, right? Whatever your statement closing date is, that's generally the day they're going to report to the credit bureaus. And then that's also the day they put that statement in the mail. You get it a few days later, you review it, you make a payment. So it's already too late. They've already reported that current balance on that statement closing date before you ever get the statement if you're just waiting on it to come in the mail. So the secret is, especially for people that pay it off every month, is to pay it off 3 or 4 days before the statement closing date, not the due date. That way your payment has a chance to post and your new lower balance is going to get reported versus the maxed out balance.
Wow, that is an awesome tip because I don't think anybody really thinks about that. Because I know I have buyers all the time. Well, I pay my credit card on time.
Mm-hmm.
I pay my credit card on time. Well, that's great. But what you're saying is whether you get it electronically or get it in the mail, look at what the closing statement date is
Mm-hmm.
and make your payment 3 to 4 days before that because of the posting issues that sometimes we see.
Correct. And you only have to worry about it if your balance is up near the limit. So here's the next secret. If you have a balance that's between 10 and 30% of your limit, then you're going to see your score go way up. If it's between 30 and 50% of your limit, it will go up, but not quite as much. Once you owe 50 to 75% of your limit, your score starts going down. And if you owe 75 to 100% of your limit, it drags your score way down. If you go $1 over your limit, it's like credit score death. So
Oh
you
my.
never want to have your balance over your limit. So the sweet spot is to owe between 10 and 30% of your limit on that statement closing date. Now notice I didn't say 0 to 30%, because if you don't use it at least every 90 days, then it looks like you just don't use it at all and it becomes unrated in your score. So if you have a handful of credit cards, and there's a couple that you just really don't use, you're going to want to put something on there at least every 90 days to keep it active in your score, to show a very low balance to limit.
That's a great tip. So what about the other ones? Because you said there's 5.
Right. So, of course, paying your bills on time. Now, here's another interesting thing about that. If you have just one late payment in otherwise a really great credit score that has happened in the most recent 12 months, you're going to lose up to 50 points off your credit score. So, keeping your payments current and never making them more than 30 days late is critical to keeping that score open. That's the biggest piece to your credit score, but it's only 35%. Another thing is, if you don't have a credit card at all, you're going to lose 30% of your potential score. That's 255 points. And so you must have a credit card in order to get your score up into anywhere past the 620s or so. So
Wow.
that comes into that mix of credit. Here's the magic mix. They like to see at least one installment loan, like an auto loan. 3 to 5 credit cards is kind of that magic mix for the revolving debt. And then they like to see the mortgage loan. So that's your magic mix for getting the highest credit scores. Um, and then the
Wow.
and then the length of time that you have your credit is really important too. So I did have a couple of credit cards that I always just kept handy in a file cabinet, in case for emergencies, and I hadn't used them in over a year. I didn't really care. I had plenty of other active cards, so they were just always there for emergencies. Well, guess what happened during COVID? So during COVID, people were losing their jobs, their hours were reduced, they were off work for a period of time. It took a while to get unemployment, so they used their credit cards to manage, right? And then so they started racking up their credit card balances. The credit card companies became alarmed and said, oh my gosh, if somebody has a credit card and they haven't used it in a while, we're closing it, because we can't let all of these people rack up their credit cards and then have them not be able to make the payments. So they just closed them out.
Well,
So
and
these,
at that point, when COVID first started, there was a lot of uncertainty as to what was going to happen and were we ever going to go back to normal? And we still
exactly,
really haven't. And it's been 2 years,
yeah, exactly,
going on
exactly.
the 3rd year, 3 years
Mhm.
now.
Yeah. And so those 2 credit cards that I had in my file cabinet, they closed them. And I'd had them for well over 20 years. And when they closed them, my score dropped 95 points because I lost that 20-year history on those cards. And so I was way worked up about this. And I called them up and I said, you reopen those right now. They couldn't and they wouldn't. They said, we're happy to give you another new card, but we're not going to reopen those ones. Well, I didn't want a new card because now I'm going to have another inquiry on my
Right.
credit report. I'm going to have a brand new account that has no history, and I don't know what kind of limit or anything they're going to give me. So
So to have
yeah.
prevented that, you could have just had a charge that went
Hmm.
on there every month
Hmm.
and it just got paid every month. And then they most likely wouldn't have closed those because they would have seen that you were using it. So
Exactly.
I did that. So basically now 3 years into COVID, I bet you've seen a lot of buyers that's impacted.
Absolutely. So I've seen a lot of buyers that went through that same thing, and boy, oh boy, can I feel that pain, because I'm really proud of working hard on my credit score, and to lose 95 points, it's taken me well over a year just to try to get back up to where I was before. So it doesn't happen overnight. So another question I get is, what if somebody doesn't have any credit? Or what if they have very minimal credit? How do I build that credit score? And so one of the easiest ways to do that is whoever you bank with, check with them and see if they offer secured loans and secured credit cards. Now here's another trick that can help you get two secured sources of credit for one cost. So let's say like you have $500 in your hands and you go into your bank or credit union and say, I need a secured loan to help build my credit. Here's $500. I want you to loan me $500 and I'll pay you back. So your bank or credit union will put that money in your savings account and they'll freeze it. But they're going to issue you a check for $500 and you make $50 a month payments for a year and you start establishing a credit score. But now I've got this check for $500 in my hands, right? So I hand it back to them and I say, okay, with this $500, I want a secured credit card. And so now they put that $500 in my bank account and freeze it, and they issue me a $500 Visa card. And now I get to use my Visa card, never spending more than $50 to $100 or $50, 10 to 30% of that limit on that card. But I've got two sources of new credit building me credit for one $500 bill.
That's genius. Wow. And I know that buyers that I've sent you in the past, you have definitely helped get that going because they thought it was smart just to pay cash for everything.
Absolutely.
And then when you went to meet with them, they had no credit score. So you helped them build a credit score by doing that. And it's only one $500, correct? And it created two credit accounts, I guess you would call them.
Right, right. And so to have a valid credit score for mortgage lending purposes, the rule is that you're going to have three sources of credit for a minimum of 12 months. So this gets you two right away. And then usually if you wait just 30 days for those to post, then you're going to have a score and you can get a Home Depot or a Walmart or a gas card, another source, so that you can have those three sources. And you want to do those as soon as you can, so that you can start getting that history behind you of having those three sources of credit.
What you said was 12 months.
Correct.
So established credit for 12 months. So
Right.
Again, buyers that are, young people getting into the world today, graduating from college, graduating from high school, to do this with them within 12 months, they would have established credit. Yes.
Correct.
Okay.
Now there's one more opportunity that we have if they have zero credit, so not bad credit, but just no credit, and we can establish what's called a non-traditional credit report. And so the non-traditional credit report is where we get letters and documentation from your landlord that you're paying your rent, your car insurance, your cell phone, your utility bills. So if you have these other sources of credit that don't typically report to the credit report, we can build a non-traditional credit for you and still have opportunities for financing. It's just a little bit harder, and it's a little bit more work and a lot more paperwork, and it takes a little more time. But we can do it for certain different loan types. It just doesn't open up every single opportunity for you. So I like to make sure people have the opportunity open to them.
So 5 tips to improve your credit score, and we all can benefit from an improved credit score. So if you guys have any questions, please take advantage of this information. I mean, listen to this video 2 or 3 times, write down all of those tips, take a peek at what's happening with your credit score.
Absolutely.
And let us know in 90 days, did it improve? Because you quit charging up your credit cards and you quit not paying them 3 to 4 days after the closing statement. So try those tips of doing the things that Rhonda's talking about and let us know in comments. Reach out to us. Our contact information is at the end of this video. So feel free to reach out to either one of this. Of course, if it's about credit scores, you should probably go to Rhonda and not me, because she is obviously the magician and just opened up her bag of tricks for us. If you're watching this on YouTube or Instagram, remember that I'm a big believer in making sure that you have the information so that you can make great decisions. Rhonda and I will be doing a weekly show answering all these common questions that you have about the home loan process and the home buying process and the real estate industry. If you have questions, feel free to put them in the comments below, and we will record a show answering those questions.
Yeah.
So see you next week, Rhonda.
All right. See you, Melissa.